If you are seriously shopping for an IUL, your journey is now over. There is no other IUL that can beat what this has to offer. It's a very special IUL because of the index associated with it, which is proprietary to Securian, the holding company for Minnesota Life for over 140 years, and to only about 5,000 agents in the US. It is uncapped and has a 2% floor for all intents and purposes. This is not a video to stop watching halfway through because I'm not going to get to the good stuff until toward the end. So stick with me. By the end of this video, if you are interested, ready to move forward, and have a short time horizon, sorry, no tire kickers, please, click on the link below to the application and let's light up your life with an awesome retirement plan. This is also excellent for children too. Let's take a look at an illustration. This is the Securian Minnesota Life Balanced Growth Accumulator 2 Index Universal Life Insurance illustration on a 35-year-old healthy non-smoking male. It is structured properly for maximum cash accumulation with the lowest death benefit the IRS will allow. As you can see, it's right down to the dollar. He is contributing $1,000 a month until the age of 64, when he'll begin to take his tax-free retirement income. This contract includes accelerated death benefits for chronic and terminal illness. Now, that really special index is the S&P Prism Index, which was designed by Annexus. It is a volatility control index and is rebalanced daily. Take a look at this 30-year historical performance chart for this index. In 2008, the S&P lost approximately 38% of its value. But this index had a gain of 20.47% because the index is rebalanced daily. We will come back to this chart in a minute, but here are the details of the index. You have a choice of indexes here, but there are only two choices worth looking at, and that is the 1-year point-to-point and the 3-year point-to-point. With the 1 year, interest is credited once every year, and with the 3-year, once every 3 years. Both are uncapped, and if for some reason the index were to go in the red, which it never has, Annexus guarantees you 2%. This is how the 2% interest crediting works. Your premium dollars first go into an interim account where it earns a fixed interest of 2% daily. On the third Friday of every month, those dollars are transferred to your index, where any earned index credits are now tied to the movement of that index. Now, here's where it starts to get exciting. With the 1-year point-to-point, you have a 105% participation rate, and with the 3-year, 115% participation rate. How that works is this. Let's say the index grew by 10%. With a 105% participation rate, you would be credited with 105% of that gain, or 10.5%. With the 115% participation rate, you would get 115% of that gain, or 11.5%. That's pretty cool considering that a lot of indexes have less than 100% participation rates. That's not all. Here's the icing on the cake and what makes this Annexus index so special. No other carrier in the industry has an index rate or bonus multiplier like this. So here's how it works. The 1-year point-to-point has a 120% multiplier and the 3-year 185% multiplier. It is basically a participation rate on a participation rate. So again, if the index grew by 10%, with the 1 year, you would be credited with 120% of that gain, and with the 3 year, 185% of that gain. And this is in addition to the participation rates. So here's the math. And this is where it gets super exciting. When you combine the participation rate and the declared bonus multiplier, you get amazing results. With the 1 year, 10% growth times 105% participation rate times 120% bonus multiplier equals 12.6% credited to your account. With the 3 year, 10% growth times 115% participation rate times 185% bonus multiplier, your account is credited with 21.27%. Now back to that 30-year historical performance chart for the 3-year point-to-point. In 2008, when this index grew by 20.47%, you would have been credited 43.55%. So 20.47% times 115% participation rate times 185% bonus multiplier equals 43.55%. I would recommend you pause this video right now and just take a look at this index's performance. Seriously, why would you put your money anywhere else? Does your 401k perform like this? How about your IRA? And if there's a market crash, you lose money with those accounts. But this index actually performs better during a market crash because it is rebalanced daily. Here is the 30-year historical performance chart for the 1-year point-to-point. And you can see there's a huge difference in the performance of the two. Now, given all of that, the illustration will show 3 different scenarios. The first is the guaranteed values, which is the legally required disclosure of the worst case scenario, which is maximum charges and 2% interest credited to your account for all policy years. Understand that any other carrier only guarantees 0%, but this is a very special index. If this actually happened, it would be like an Armageddon or something, and we would have a lot more to worry about than only earning 2% interest on your money. The middle scenario is 3.25% interest, which is the interest rate on a fixed account. And the third is the maximum allowable illustrated rate, which is only 5.47%. This is because of the National Association of Insurance Commissioners' Actuarial Guidelines AG 49 law that limits the interest that can be shown on life insurance illustrations. Remember, this is a hypothetical illustration. This does not take into account the participation rate or the declared bonus multiplier. So you must keep in mind the index's performance over the last 30 years to get a more realistic idea of how your money could actually grow. If the index grew by only 5.47%, with the participation rate and the bonus multiplier, you would be credited 11.64%. The cash value is the amount of the cash available to you in the form of loans or withdrawals. The surrender value is the cash value minus any surrender charges if you were to cancel the policy within the first 10 years. The death benefit differs from the initial death benefit because the death benefit equals the initial death benefit plus the cash value. And this is what your beneficiary would get if you were to pass away. Now, in year 10, the cash value and surrender value are the same for the duration of the policy until you take a loan or beginning taking your tax-free retirement income. To put the 10-year surrender period into perspective, if you are under the age of 59 and a half, a withdrawal from a 401k or IRA is subject to a 10% early withdrawal penalty, and you will have to pay income taxes on that money as well. So, for a $10,000 withdrawal, once all taxes and penalties are paid, you would only receive approximately $6,300. With an IUL, there are no penalties for accessing your policy's cash value before the age of 59 and a half, and your IUL tax-free income does not affect your Social Security income. At the age of 64, premiums stop and you start taking your annual tax-free retirement income. Keep in mind, this income amount here is based on only receiving 5.47% interest and does not include the participation rate or the bonus multiplier. Once you start receiving your tax-free income, you will be paying interest on that loan. Your policy loans and interest owed on the loan are all figured into this illustration, which assumes a participating loan of 4.75%. Charges. To put fees into perspective, 401k and IRAs over the long term are 2 to 3 times greater than for a properly structured IUL. The difference is IUL fees are front-loaded for the first 10 years, so you pay more in the beginning years when your cash balance is low and much less after the 10th year. The premium charge is a charge applied to all premium payments to reimburse Minnesota Life for state premium taxes and other administrative expenses. The cost of insurance covers the base cost of providing insurance, which is dependent on your age, gender, health, underwriting class, and death benefit amount, and is applied throughout the life of the policy. The policy issue charge is a fixed amount to help cover the cost of issuing, underwriting, and distributing the policy, as well as the agent commission. This charge only applies for the first 10 years, and it drops off. Additional charges. This is a monthly policy charge and also includes charges for accelerated death benefits. Otherwise, this would be $60. The bonus interest credit is like a thank you for doing business with us for 10 years, so now we're going to reimburse you for some of your expenses. They will continue to be paid every year thereafter, and the reimbursement amount is calculated as a percentage of your policy's accumulation value. Interest crediting. In this illustration, again, the index only grew by 5.47%, and it doesn't take into account the participation rate or the declared bonus multiplier. So it's really important to note that if the index grew by only 5.47%, you would actually be credited 11.64%. Loans. A fixed loan is less expensive than an indexed or otherwise known as a participating loan. But with a participating loan, your money never leaves your account. It continues to earn interest. This illustration assumes an index loan that has a loan rate of 4.75%. Compare that to Allianz's rate of 5% and other carriers charging 5.5 to 6% or more. The key feature again with an index loan is that your money is still in your account earning interest. If the index grew by 10% with a 115% participation rate and an index bonus multiplier of 185%, then you subtract that 4.75% loan charge, your account would be credited with 16.52% interest. Again, if you are interested in this IUL, are ready to move forward, and have a short time horizon, click on the link below to the application and let's light up your life with an awesome retirement plan. And as usual, give me a thumbs up and subscribe.